Welcome, everybody, to the second year of what has become a flagship event for Bloomberg, the Bloomberg Emerging and Frontier Forum. I'm Stephanie Flanders. I'm head of Bloomberg Economics and senior executive editor for economics at Bloomberg. We were in London this time last year. The world has changed a lot since then, and for obvious reasons, we're going virtual for this forum, but we've also decided to extend it across 3 events. So the next one will be on the 15th of September, and I'm sure you'll be hearing more about that in due course. But first, let me hand over to my boss, the founder of Bloomberg, Mike Bloomberg, to give you a proper welcome.
Hello, everyone. I hope all of you are staying healthy and managing during this difficult time. And welcome to the Bloomberg Emerging and Frontier Forum. The coronavirus pandemic forced us to redesign this event as a series of virtual forums that will take place throughout the year. But the crisis also makes these events even more important and more urgent. This is a chance to hear from leaders who are making critical decisions about how to restart and revitalize national economies, including finance ministers and the heads of central banks. No one knows exactly how long this crisis will last, but the more that we all talk to each other and share ideas, the stronger we'll emerge. And that's what today is all about. So thank you all for being a part of it. And now let me turn it over to our moderator, Stephanie Flanders.
Well, thank you for that. Well, look, we have an exceptional lineup. I don't think I've ever had to juggle so many finance ministers and central bank governors in a single event, not to mention all of the web connections. But fingers crossed, it's all going to go well. Just a few housekeeping notes. Make sure that you're using Firefox or Chrome to view this. You'll find it a lot easier. If you are having trouble with audio or video, we found often if you just refresh your browser, that can work. And you can restore windows using the buttons at the bottom of your screen. And the size of each window is adjustable. You can move around different people, different parts of the screen. It is an interactive event. I'll do my best. We have had a flood of questions already submitted by people who were registered for this event, so I can't promise to get to all of them, but I will do my best to feed them through into the conversations I have with these very senior policymakers. If you could include your first name and your city when you submit those questions in the Q&A box in the side window. Now let's get started. We have a session, The View from the Economic Cockpit, and I'm delighted to say that we have not 1, not 2, not 3, but 4 finance ministers with us. I guess you call that a grand slam of finance ministers to tell us what their world has been like during this crisis and how they plan to manage their economies through it. So let me introduce you to all 4 of them. We have His Excellency Arturo Herrera, who is the Mexican Minister of Finance, His Excellency Martin Guzman, Argentine Minister of Economy, Her Excellency Maria Alva, the Minister of Finance for Peru, and His Excellency Carlos Dominguez III, the Secretary of Finance for the Philippines. Now, I want to hear from all of you first about the biggest lesson that you've learned from managing the COVID crisis so far. Minister Herrera, what would you say?
Hi, Stephanie. Can you hear me?
I can indeed.
Okay. So probably the most important lesson that we got from this crisis is the need to have a source of collective action and social responsibility to fight it. One of the things that is clear from here is that when one takes care of oneself, it's actually taking care of the other. The way we are seeing this from the economic point of view is we have spread the problem in 3 parts. The first one is the purely healthily related, where the first thing that we have to do is to put lives first and take care of people's lives. Then, as a result of the isolation and social distance, we have an economic effect, a very drastic economic effect. We haven't seen this kind of effect since 1932 in Mexico. And the third one, which is just out there, is we need to make sure that there's no contagion, so to speak, from the health sector to the economic sector and then to the financial sector. So far, so good on the financial sector in Mexico.
And just to ask you, Mr. Herrera, one of the things that distinguishes Mexico in response to this is there has not been a substantial fiscal stimulus to support the economy. Is that something that you have found difficult as an economist? Obviously, the majority of economic advice has been for governments, even that have been very conservative in the past, Germany, for example, to open the floodgates, to have a lot of spending to support the economy.
Yeah, actually, we wish we could have done much more, but it's a matter not only of willingness, but a matter of fiscal and economic space. Just to give you an idea, you mentioned the case of Germany, but we could think about 2 or 3 more advanced economies who are doing a lot: Japan, the U.S., Canada, and Britain. Germany and Japan, for all practical purposes, have negative interest rates at which the government is raising the money. The interest rate in the UK, and you probably could correct me, I think it's 0.1, so it's just 10 basis point. As of today, and I'm not going to elaborate much about that because the central bank actually met yesterday and are going to release the new policy today, is 5.5, the interest rate in Mexico. So actually it cost us 55 times more than in the UK to raise money. It cost us 20 times more than in Canada. So the space that we have on the debt side is much more smaller. Also, as opposed to most of the advanced economies, we still have 30% of our debt which is in a foreign currency denomination. The peso moved from 18 pesos to dollar to close to 22.5 yesterday. So that means that our debt has increased already in something between 15 and 18%, even without raising an additional peso. So that these kind of things put a framework on the constraints that you find in developing economies, vis-a-vis, even in high-income economies, vis-a-vis developed economies, where the government is basically raising debt at negative real interest rates.
Well, I know that's going to be a theme of these conversations. Obviously, emerging and frontier economies are in a very different situation going into this crisis, but investors look at different ones and can discriminate between them based on some of their past policies. Minister Martin Guzman, we tend to say this time is different. This crisis is very different. But one thing that's not so different is that Argentina is in the middle of negotiations over its debt. What is your thinking at the moment?
Good morning, Ms. Flanders. Good morning, good afternoon, everyone. Please, first let me thank you for the invitation, and let me congratulate the organizers for adapting the logistics in order to make this event happen under the current circumstances. Well, indeed, so Argentina received COVID-19 in the context of a severe macroeconomic and debt crisis. This, of course, created bigger challenges to what already were unprecedented challenges. And we've been navigating through those challenges in a way that it's actually protecting the population that fell into a state of vulnerability because of the consequences of the measures that we had to adopt in order to first protect health of the Argentinians. So the debt crisis is something that we started to resolve before COVID-19 hit us. We had already initiated that restructuring process, and we had to adapt the logistics and the whole process to the situation we were going through, and we're still working with our creditors in order to resolve the situation. When it comes to the response to COVID-19, I would say that the biggest lessons that we learned is that first, it was very important to react fast, to take bold and decisive actions. This is, as I said, an unprecedented challenge that require unprecedented measures. Second, it's clear that there is no one-size-fits-all bad policies, but there are principles that can be followed. And I think every economy in the world can follow the same principles. First, protecting health being the number one priority. Second, making sure that the state protects the most vulnerable, those that would be in a very critical situation because of the measures that are required in order to reduce circulation. And third, to protect the know-how of firms, the know-how of workers. It will be very important to maintain the capabilities in the economic system in order to make sure that the effects of the crisis are not long-lasting. We also learned that social systems of social protection are extremely important. Existing systems of social protection is what help us to react fast to the crisis and reach those sectors of the society that were in the most vulnerable situation. And of course, flexibility. That I would say that's the fourth lesson, to keep flexibility, because circumstances continue evolving and changing, and we have to adapt fast to the changes that present in the economy.
I mean, you face the same issue that many other emerging market economies face, but in particular, the lack of access to international markets and the difficulty of funding yourself, any extraordinary measures that you might want to take in response to COVID. I mean, do you see the government now quite heavily reliant on central bank financing if we think of how are you going to fund yourself out of this?
No. Indeed, I always say that Argentina was an economy that was in a sick state and it was hit by COVID-19. So, of course, the effects of COVID-19 are more damaging than for economies that had public finances that were in a healthy state, and financing constraints were much tighter. So we had to respond to the crisis within those constraints. We are making sure that the fiscal deficit stays under control, especially given the circumstances we face. We have been working on rebuilding the peso debt market and rebuilding the peso yield curve. And that has been tremendously helpful during the crisis, because despite the increases of liquidity that were needed because of the additional measures that we enacted, still we managed to contain the effects of the increases in central bank financing. But of course, we're working on restructuring the debt, on putting the public finances in a healthy state, and establishing a path towards fiscal consolidation with a horizon in which we intend the central bank policies to act only for stabilization purposes.
Okay, well, we're going to have plenty more to talk about in regard to monetary policy, not just now, but also in our later session. But Minister Alva, Peru is in a very different situation. We have talked about countries that have had built up fiscal room coming into this with more capacity to act, and that is pretty much exactly what you did, as you took very strong action to confront the virus. There was also a big fiscal effort in Peru. If you were looking back now on those first few months, is there anything you would do differently, or do you feel you have hit the right balance?
Good morning. Thank you very much for the invitation. I think that thinking about Peru economy, we have a very solid economy. We have done a very good job in the last year with the macroeconomic management, but we have to do lots of things in microeconomics. When the crisis started, we need to take very aggressive measures regarding all the policies of quarantine and containment, because of structural problems in our economy. We have almost 17% of informality in the labor force. We have a really weak health system. So this made that Peru has to take the strongest and more aggressive quarantine. And this has really had huge impact in our economic growth in April and May. So I think that as a country, what we had to do many years ago was to really solve these structural problems regarding informality, regarding the quality of public services, because these issues has made us very vulnerable during the crisis. And we had to take these very aggressive measures. On April, our economy was working 44% of the GDP. So this will have really important results in the development and in our growth rate this year. So we are going to, in this second part of the year, we are going to really work very hard. We have been a strong coordination with the central bank, and we have had a very successful program that gives liquidity to the economy. And I think that this is like a huge challenge for our country, is this idea of economic development as an integral, not only economic growth, because the fact that as a country we have not solved structural problems has really made us very vulnerable in this crisis.
Well, and I was struck by that also when I saw some of the questions coming in for this event, that many of the questions for you, Minister, were about some of the issues you've raised. The difficulty, even though when we look on paper, Peru has had this very sharp fiscal response and has been able to do it, having had textbook policies recently. But the textbooks don't tell you how to get money out to the very poorest communities when there isn't a good infrastructure for doing that. And they certainly don't tell you about the impact of lockdowns on a country with a lot of a large informal sector. So I should tell you, lots of the questions are from people who don't think it's going well and are saying, why has only the support gone to, for example, large enterprises and not to the informal sector? How are you going to resolve that?
Exactly. Most of these issues that haven't been solved in many decades has made us very vulnerable in our response. For instance, only 4 of each 10 Peruvians have account at the bank. So we have this huge issue about financial inclusion. This has made us a lot of problems. We have launched a huge cash transfer program. Imagine in Peru we have 9 million households. We are going to give around $220 to around 7 million households. So we have generated this huge response, but we have been having problems with the implementation. Regarding the informality, of course, we have a very challenging agenda. In the short term, we have implemented almost a 1 point GDP program in order to generate temporal works, very basic issues related to infrastructure. So we are trying to, in this way, to improve the incomes of households through these fiscal programs.
Okay, well, plenty more to talk about that, but I should bring in Secretary Dominguez. Mr. Secretary, when I was at graduate school, academics used to sometimes say to me the Philippines should move to Latin America because it sometimes seemed to have more in common with the countries of that region than its East Asian neighbours. But a lot has changed, I'm sorry to say, at least in the number of years that have passed. A lot has changed since then. We've seen a big shift in Philippine policy, but also a lot of innovation in your policy response to COVID-19. So what's been your biggest takeaway so far?
Well, really, the lessons we've learned is, first, you have to be prepared. Fortunately, our government, as soon as it came in 2016, launched a tax reform program. And the result is that our tax take in 2019 was 50% more than in 2015. Our revenue to GDP has been the highest in 22 years at 16.1%. And, we were we had launched also a big build program, a big infrastructure program. So we're quite well prepared when this crisis hit. Of course, we'd much rather that it didn't happen. So that's the first lesson we learned. You have to be prepared. The second lesson is you have to be very clear as to what your goals are and act very swiftly. Just as we did here in the Philippines, we decided, first of all, that our goal was to protect the health of our people and to support the most vulnerable members of our society. And that's why right away we did a very quick lockdown in March 17 and started a program whereby we've supported our people with cash transfers. We have about 24 million families in the Philippines, and we were able to do cash transfers to 18 billion. It wasn't all entirely smooth, but I think we hit about 95-96% of our goal. So we moved very quickly, and we're very clear as to what our goals are. So I guess those are the primary lessons. Be prepared, realize what the problem is, and move and be very clear what your goals are, and move quickly.
One thing I wonder whether you worry about it. I mean, and you're in a way in a similar position to Peru, at least in having got fiscal room that you have won from being credible in the past. That are you spending enough of that credibility now in the response to this extraordinary circumstance? I mean, the stimulus has been, I think, barely only a little more than 3% of GDP. You've relied very much on the central bank. I know you're on the monetary board, but are you worried that there will be long-term scarring from this recession that will be worse and maybe cost you more in the long run because you were too worried about holding on to your fiscal credibility?
That's the third thing we learned also, is keep your powder dry. We don't know how long this crisis is going to last. So you have to have enough reserves for a second wave, for a third wave. So, by the way, our fiscal response is 9% of GDP. And we are not so much, we are being assisted by the central bank, but mostly our financing has come from our domestic commercial borrowings as well as foreign borrowings. By the way, our debt to GDP entering this was 39.6%. The lowest it's ever been at any particular time. So we have a lot of space here. And, you know, we see that our economy is going to be hit hard. Probably we will shrink by maybe about 3.5% this year. But we're ready for a big bounce back next year.
And you're on, I should note that we have had breaking news today because you have surprised the markets, or the central bank has surprised the markets. We're going to hear from the governor himself later, but I know you sit on the monetary board. Should we be concerned that the central bank, that you know something that we don't, that there is going to be another worsening of the economy?
Well, I think my esteemed Governor Jokno can explain the decision much better than I can. But essentially, we've seen that we have to bring back confidence to our bankers. We have to bring back confidence to our consumers, because our economy is about 70-75% consumption driven. So it's of utmost importance that we bring back the confidence of our public in spending again.
I'm sure after this I will have a debate with our economist who covers the Philippines about whether he will probably tell me his 3% is right, but I won't get into that now. Minister Herrera, just coming back to you, because we've had a lot of questions that all come down to a similar question, which relates to President López Obrador. Since he came to power, there has been a lot of tough rhetoric against the business community, or at least that's how the business community have viewed it. High-profile cancellations of projects. So this is a version of many questions I have had. What do you tell business people who are scared by the rhetoric of President Obrador? How can they be sure this isn't ending like in other countries where presidents have tried to build power at any cost?
Well, thank you for that question. And actually, I think we are far from situation like what you are describing. But I take as part of my own responsibility to build bridges with the private sector. There are some areas in which this is natural, the financial, the banking sector, but actually are meeting with some of the captains of the manufacturing sector in Monterrey this morning. I think a lot of that has to do with two things that we have to be very careful. One, we need to clarify some of our policies. The semantics are different. And we also need to understand that Mexico is extremely heterogeneous country. This is an advanced middle-income economy, but it's an advanced middle-income economy in which, for all practical purposes, 1 of every 2 Mexicans live in poverty. If we take, for example, Mexico City, which is the most advanced local government, and you take the less developed state, which is Chiapas, you have a difference of almost 7 times of GDP per capita between Mexico City and Chiapas. This is a difference that you find not within 2 countries. This is a difference that you find within 2 continents. So having a common language for a country which has this variety is very different. And the president, as many of you know, have a press conference, daily press conference at 7 a.m. As I usually say, by the time I wake up, there are already news somewhere there. So my responsibility, along with some other members of the cabinet, is to make sure that while the president is mostly speaking to the majority of the country, we are carefully building bridges and points of contact with the business community.
Well, and I would say we appreciate enormously you being available for this event, and we appreciate that it's not necessarily something that you want to do when you get up in the morning. So we do appreciate it. I mean, the challenge, and we talked about it earlier, is many people would look at, or a lot of investors look at Mexico and they say, look, we have the worst of both worlds. Normally, when you have a socialist, at least you get a lot of spending, but he's not spending in the worst recession in generations, but he's also doing all those things to undermine confidence in the business community. So that must be, is that challenging for you as an economist, knowing how risky that could be as a course?
Well, first of all, we are spending, and we are actually advancing the spending. We are moving forward the spending that we were planning to have in November and December to right now. And this is the time that the country do it. In retrospect, there's one thing that we should have done differently. We have implemented many measures to fight COVID and the effects that they have in the economy, from regulatory on the financial sector, insurance sector, etc., to issues related to public infrastructure. One of the big lessons from the 2008-2009 lesson was that it was not sufficient to have the desire to spend in public infrastructure, but you actually need to have the projects ready, shovel ready. Otherwise, it's just become wishful thinking. We are doing that, but what we did not do was to package all these measures. So we were letting people know as when we were having all these policies ready, as opposed to what some other countries did, that go in front of the nation, put a package, and send a very strong signal. But I'm also, Stephanie, very much aware about something that I think we have to carefully understand right now, which is that this is not, as we thought, as the world thought a few months ago, that will be a small lockdown of 2 or 3 months, and then we will go back, and people were talking about V-shaped recoveries, etc. This is going to be a much more longer game. And as my colleague Carlos from the Philippines mentioned, you have to have some power driver. I always keep in mind a statement made by actually something that was written by Olivier Blanchard a couple of months ago, and he said, at the moment the motto is whatever it takes. But then he said, what if a few months down the road we say, what on earth did we do, right? And particularly emerging economies, we have to be careful. We have to tread very carefully. We have to do sufficient. We have to be very careful that we don't overstep, otherwise we will have another problem.
And that's, you speak to actually something that's already come up, but I think is something that governments all over the world are facing, but it seems much more acute for emerging market economies, that trade-off between the economy and public health. And I know you're all economists. It's wonderful talking to you. I know that the economists would say in the long run there is no trade-off, because if you don't control the virus, you also cause enormous economic costs. But there is, in that decision about the lockdown, there is a trade-off. And certainly if one had to think about going back into lockdown because of a second wave. I'm interested, Minister Alba, you talked a little bit about this, but given the challenges of lockdown for the informal sector in Peru, are you thinking about that trade-off differently now?
Well, we considering this informality, the first measure we took after the lockdown was this cash transfer program. It's a huge program. It's the first time that in Peru we give money directly to households from the urban areas. So that was our first response. Our second response now is to generate these programs of temporal employment. We think that will be a great opportunity to improve some infrastructure in cities and also in the rural areas. And the third thing now is that we are seriously continue evaluating and going to implement new measures for these vulnerable households. What is difficult for them is that, an important thing is that once we have started to reopen the economy, most of them are going to get they're going to regain their jobs, but we are going to have an important and significant population. And what we're doing there is we are evaluating additional measures for protecting their households, maybe considering a new transfer for these households. And we have already also deployed some food programs. We are giving money to local governments. We are very concerned now about the idea that they have food and they have the adequate protection. I think that now that we are our hugest concern now is that we open the economy and the virus is containment is contained. So I think that we are working on this second phase of opening the economy and protecting these informal households. But I think that this huge program of temporal employment for rural and urban areas will really help these households.
And Minister Guzman, we're all quoting economists, but I know Professor Joe Stiglitz is someone that you talk to, and I spoke to him for Bloomberg a couple of days ago. He said to me he thought that the international investing community, some of them watching now, were being too tough on emerging market economies like Argentina. What do you need bondholders to do? What are you going to hold out for? Because people on the outside are wondering whether you really want to do a deal.
Well, we've been working with the IMF in assessing the debt payment capacity of Argentina. The government of Argentina has also been assessing the debt payment capacity. We've been engaged in negotiations with the bondholders. What we face is a variety of views. Sometimes these views are difficult to reconcile these views. Today, we are in conversations with two major groups. With one of them, we have managed to reached an understanding on a number of important issues. And I think with that group, the discussions have been evolving in a very constructive manner. With the other group, it's called the ad hoc group. There has been bigger differences also when it comes to legal terms. One of the proposals we received asked Argentina to go back in time and undo the progress that has been done over the last few years, the enhanced collective action clauses endorsed by ICMA, the G20, and the IMF. And that's not something that Argentina can do. Argentina is a member of the G20 and the IMF, and Argentina will adhere to the clauses to the contractual language that now has become the standard. So, of course, these are complex processes. These are processes that take time. It takes a lot of dialogue, and we remain hopeful that we will be able to, at some point, reach an agreement. But clearly, there is more work to do, and there is a distance to cover in economic terms and in legal terms as well.
Unfortunately for you, we just had a question come in which is rather detailed on this subject, but I will just put a small version of it. But Diego Chanedis is saying that the demand to issue new bonds with second generation collective action clauses was caused by your own designation strategy that you sought in your first offer. Without getting into all of the back and forth of the debt deal, do you accept that you might need to reconsider that initial strategy?
Argentina is doing a restructuring that includes different series of bonds under different indentures with different clauses. One of the indentures includes the contractual language endorsed by ICMA, the IMF, and the G20. And we are just doing the restructuring within the existing legal frameworks, of course, respecting the law. And as I said, this has now become the standard. And Argentina looks forward to continuing using what's now the standard language and the more modern language for the issuance of debt contracts.
Okay, I'll let you off on the debt thing. I have a much more basic question, again, from an economic standpoint. Where is growth going to come from in Argentina? Because people look at the very many restrictions on business, businesses leaving LATAM airline now saying it won't have domestic flights anymore because it's too difficult, too expensive to do business. Where does your government see growth coming from in Argentina? What's the picture that you can paint?
Well, first, COVID-19, of course, is having massive effects on the economic activity. We're doing everything within our reach in order to make sure that the economic capabilities of the country are preserved, so the country can get out of COVID-19 in a way that economic growth can be restored. Of course, the restructuring, the sovereign restructuring is part of that to give the country the air, the oxygen, to be able to resume economic growth. After COVID-19, we expect to have massive subutilization of capacity, of supply capacity. So after COVID-19, it will be possible to grow with the existing capacity, but that's only for the short term. Looking at the medium and the long term, the country needs to ensure that there is a convergence towards a structure of production that at the same time delivers creation of jobs, dynamism, and stability. And we've been working on that from day one since we took office in December 2019 on creating macro conditions of stability and giving also room to the state in order to pursue productive policies that help the private sector to increase productivity, to increase value added. The state has a very important role in the creation of knowledge, infrastructure, logistics, also the energy sector. In the past, the development of the energy sector has become one of the critical bottlenecks for sustaining increases in real demand. The president in March had announced before COVID-19 and the oil shock hit the global economy that the executive will send to Congress a bill determining new rules for the growth of the energy sector. And that's something that after this, we have a more clear view of where the global economy stands, we will resume that part as well. But again, so there are two main pillars. One is macroeconomic stability. That's of the essence for sustaining economic growth. And the second is productive policies, the role that the state plays in helping the private sector to have a more dynamic environment.
Thank you very much. I had one more quick question to Maria Alva, and then we're going to run out of time. But I'm struck that, and I might also put this to Minister Herrera just as briefly. When I was at the US Treasury many years ago, I was part of the early discussions around the contingent credit line of the IMF, now somewhat changed as the flexible credit line. Peru and Mexico both have qualified for that, and it was designed, one would think, for a circumstance like this. It's the kind of international support that we often talk about for emerging markets that could be there, and you could draw on it without stigma. Why has Peru not drawn on that facility?
Thank you. That facility is for the central bank, is for monetary policy. So as it's not that for us. It's an instrument that the central bank will use. So that is their autonomy, no. But for this, for our plan for this year, our economic plan is funded by. We have a fiscal stabilization fund. We have access to multilateral contingency lines. We are also implementing a strategy of optimization of our public funds resources. We are including a fungibility concept. We had many resources in different accounts that have been there and haven't been using for many years. So we are trying to optimize that. But specifically on the IMF question, that is for monetary policy for the central bank.
Okay, well, we have run out of time now, and I apologize I couldn't get back to Minister Dominguez. But if I speak to you at length, I'm taking time from your own central bank governor. So I hope that you will forgive me. But thank you to all of you, Minister Herrera, Martin Guzman from Argentina, Maria Alva, and Secretary Carlos Dominguez. Thank you so much for joining us, and we will be moving on now to our next panel, where we will have, I think, a slightly different perspective on the challenges of the last few months and where countries can go from here. We have senior representatives from the financial sector and investing community, as well as central bank governors. So let me introduce first Dr. Benjamin Dinoño from the Philippines Central Bank, Lesecha Canyago from South African Central Bank, the Governor of South African Central Bank, Yerlan Sijikov, who is Deputy Head of Emerging Markets for Amundi, and Sonia Gibbs, who is Head of the Global Policy Initiatives for the the Global Bankers think tank, the Institute of International Finance. So thank you very much for all of you. Governor Dinoño, I'm interested. I don't expect that you'll be surprised by anything that Secretary Dominguez said about the Philippines earlier, but you were one of the first central banks to act in response to COVID-19 back in February. You have played, we talked about this a little bit, you have played a very big role in responding to the crisis. Have you done things you never imagined doing when you came into 2020?
No, we continue to work closely with the fiscal authorities. We can act faster because the central bank is, as you know, autonomous. We don't need congressional action or something like that. So we thought that given the pandemic, we have to infuse liquidity into the system. So we cut our interest rates by 125 basis points during that period, and we reduced our reserve requirement to 200 basis points. and we did other things. So we estimate that we have actually increased liquidity by about 1.4 trillion pesos, or that's about 7% of GDP.
And there have been many central banks in emerging market economies in this crisis that have bought government bonds, in some cases corporate bonds, and you are one among those, and you have also lent money directly to the government. Can we just clarify, you do not consider that quantitative easing, but it is monetary financing of a form?
Correct, but that is actually perfectly legal. That's provided for in our charter. We lend to them the equivalent of 20% of the average of their revenues for the last 3 years. That's actually about 540 billion pesos, but they just borrowed from us in a repo arrangement, something like 300 billion pesos. So, and that's perfectly all right. That's legal, because, as you know, because of the pandemic, government revenues was reduced. At the same time, government has to spend a lot of money for granting aid, subsidies, etc., and for beefing up our health services. So higher spending, lower revenues. They need money, so we gave them. We entered a repo arrangement with them.
It's funny you should, and I don't want you to take this the wrong way, but it's interesting. One doesn't normally hear central bank governors saying quite so often that something they're doing is legal, because of course we would never have any question that you would do something illegal. But are you concerned? I mean, are you worried about the way that these transactions might be perceived, and that's why you have not gone into a more formal quantitative easing program? Because I guess the downside is that some investors listening now and other times are not quite sure what you're doing.
No, we explain it to them perfectly. The arrangement, it's a short-term bridge financing, 3 months for 3 months, and then a renewable for another 3 months. And so that is actually provided for in our charter, because under the previous arrangement where the central bank was not independent from the national government, the national government can have access to central bank financing anytime without.
Oh, I think we're just temporarily losing the sound there on the governor. We might come back to him briefly, or he might just go into audio if he's having trouble with his connection. But Governor Canyejo from South Africa, in a way, South Africa comes into this in a much weaker position than the Philippines, but you have faced the same challenge, that you have been responsible for most of the response of South Africa because of the lack of fiscal space. Have you worried that you are that it's going to hurt your credibility to provide this support to the government, including buying bonds?
Well, we came into this crisis actually as a central bank from a stronger position. The fiscals might be another challenge, but the central bank came in with solid buffers, and we were able to use those buffers. And so we had inflation within our target range and closer to the midpoint of our target range of 4.5%. And so that gave us the space. We started responding from January, and year to date, total policy relief that we had given in terms of the policy rate is 275 basis points. So we had the space to do that. Secondly, was that the South African banks have significant regulatory buffers. They provided, out of their own initiative, relief to households and firms. And what the central bank did was to allow them to dip into regulatory buffers. And these regulatory buffers were built precisely to enable banks to respond when they are faced with a shock. And then thirdly is that we identified that there was a dislocation in the South African government bond market. So our response in getting into the government bond market didn't have anything to do with government's inability to fund itself. Our markets are very deep. Government could fund itself there. But we did find that there was a dislocation. Proper price discovery was no longer taking place. And because proper price discovery was no longer taking place, the central bank stepped in to provide liquidity in the capital market, but also in the repo market so that banks could meet their short-term financing needs. So what we did it within our mandate, and we had indicated that we stand ready to do more in accordance with our mandate. So it was not for us, the response was not like that we have taken over where fiscal policy couldn't. It was because we had the buffers and we could utilize those buffers.
And of course, I should have said, when I was talking about a weaker position, I mean the country as a whole, because was already in recession and has the very high public debt ratio, getting towards 100%. I think you have likened the challenge to the challenge of Argentina. But how do you think about those bond purchases going forward? Do you think that is now part of your toolkit or a response to that very specific situation that we were facing in the markets a few months ago?
It has always been part of our toolkit. I think that the last time we actually utilized this was when the central bank was the official market maker in government bonds. That ended in 1998. And we had a very small portfolio of government bonds, which we utilized for our open market operations. So our bond purchase program has to do with getting the financial markets functioning. It's not because we are trying to do yield curve control or that we do not like any particular price. We act across the yield curve depending on where the dislocation in the market is actually taking place. So it is part of our toolkit. We stand ready to utilize it in accordance with our mandate.
Thank you. I'm sure we'll get back to that. And I'm interested now to have the perspective of two people who are not in the economic cockpit. We have so many luminaries of the policy world here, but Yelen Sijikov, and I should also say I demoted you accidentally earlier. You are the head of emerging markets for Amundi. When you hear, I think we've had 9 emerging market central banks engaging in government bond purchases in this crisis, which is not necessarily something we would have expected to see. As an investor, when you hear of that happening, what was your immediate reaction when the first few central banks started to do it? Did you think, gosh, that's fantastic, they now have all that credibility that they can do this? Or did you start to worry on behalf of the investors that they were turning, that this was signs of a reversal?
I think these are the signs of things to come. As the toolkit of the central banks has clearly been expanded to use the quantitative easing or forms of quantitative easing in general, which I think is not a bad thing to have that expansion. Of course, not everyone can afford it. And thinking even from the governor's comments earlier is that some central banks have had already credibility built in with years and years of good communication and trust developed between central bankers and investors, and some, frankly speaking, had not. So, of course, in case of South Africa, the credibility of the central bank has always been there. In case of other countries, perhaps maybe Turkey, that has been a challenge. So I think it really depends on whether there is credibility with investors, built-in buffers, if you want, of trust, and that's how we perceive it. But really, most of the central banks in emerging markets probably will accept that as part of their toolkit going forward.
And do you think, do you worry that in some areas in Argentina, for example, since we don't have Minister Guzman here anymore, though he's probably listening, that it has become, there's not enough of a clear line between quantitative easing, which is part of the central bank toolkit, and straightforward monetary financing?
Yeah, it probably would be unfair to really focus on Argentina, but what really is important in this crisis is, and investors really take note of, is really how well coordination of policies is between the Minister of Finance and between central bank governor. And really referring to Argentina, and maybe the case is now different, it wasn't really a huge secret that under Macri administration we had, the central bank governor and the Minister of Finance didn't really see eye to eye. So really, this is something of a bad example, if you want, of that past administration. Where we speak today, we've seen an extremely good coordination in some countries, and I will give an example of Indonesia, where we see really good concerted effort on the communication side, showing unity and how the response to the COVID-19 has been so far exemplary for countries like Indonesia. Even countries like my home country, Kazakhstan, has been actually quite good in terms of coordinating those policies. And one has obviously to be careful thinking how well those policies are coordinated, especially if they're being pushed into those coordination by the executive branch, like we've seen in India, or maybe perhaps in Turkey. But if these are truly done as an independent institutions, as a central bank governor here would obviously confirm, I think this is actually a very, very good sign.
No, and I think, we should be clear that these are the same challenges that central banks across the developed world are facing. And in some cases, you mentioned Indonesia, there are emerging market central banks that are showing the way, or at least showing ways of handling this very different environment and still maintaining, one would hope, independence. Sonia Gibbs, there's a big issue that we have not talked very much about that I would love to get your views on. A lot of conversation has been around the lack of emerging market resources, even with the help of distinguished people like we're hearing from in these panels, especially if the worst is yet to come when it comes to COVID-19, which could very well be the case for emerging markets. The G20 has asked private creditors to participate in debt relief efforts. What has been the response so far? Do you think it's been sufficient?
Well, I have to say, the response to this call really has been phenomenal. First, let me back up and explain a little bit about the Debt Service Suspension Initiative and what it is. In mid-April, in the G20 communique, there was a call out to all official creditors, so G20 governments, Paris Club creditors, and so on, to allow some of the world's poorest countries, about 73 of them, to suspend their debt payments, principal and interest, through the end of the year, which would free up funds for fighting the pandemic, and also to address the economic damage to their economies caused by sort of global recessionary conditions, lower tourism revenues, lower export revenues, and so on. So this is a very noble ambition, and it's been executed very, very quickly. On the official sector side, I would say that about half of these countries now have either been granted this debt relief or in the process of doing so. So tremendous progress. The World Bank has recently estimated that up to 12 billion in debt service payments could be affected through the end of the year. And that's probably not far off half of the total amount of debt service that's owed. So that's a good amount of money. On the private sector side, I have to say, we have a committee for sovereign risk management that has grown from, I don't know, maybe 25 people to over 150 people just in the course of the last couple of months, because creditors of all stripes, banks, bondholders, private equity, you name it, have been lining up to sort of find ways to help. So we've got representatives of over 100 firms and something like 45 trillion assets under management. So all looking for a way to help. And it's not been easy. It's difficult for private creditors to participate in exactly the way that this debt service suspension is set up in this short period of time. For example, asset managers have a fiduciary duty to their clients. It's not simply easy for them to wave a wand and say, okay, go ahead, suspend the coupon payments. Are they going to be in breach of fiduciary duty? So that's one issue. Another is kind of the market consequences. What does it mean if a country suspends its debt payments to private creditors? Is that a default? What does it mean from a credit rating agency perspective? And what does it mean for the market access of the borrowing countries? So borrowers are considering carefully, whether the trade-offs that they would have to make in getting debt relief from private creditors. All that said, we've developed kind of a toolkit, terms of reference, to allow private sector creditors to go ahead and grant these requests for debt service suspension. But we're also working on a whole multitude of ways to affect private sector debt relief in some very creative and innovative ways, new structures, new instruments to allow this to happen. So a tremendous amount of goodwill.
I guess if one was sort of taking a more sort of devil's advocate position, I know that there are many who would look at the current situation of emerging market economies and even the efforts that the IF has helped to coordinate in the G20 and would say it's not nearly enough for emerging market economies that have been told for years, if you do the right things, you will have private investors, both the foreign direct investment and portfolio investment, that will hang tight with you through good times, through bad times. And instead, what we've seen is money flying out of emerging market economies in response to this awful crisis, and actually quite slow efforts. The very poorest countries maybe will benefit from that measures, but we heard earlier from Martin Guzman, there's been a great reluctance. It feels like there will be a lot of reluctance if larger economies turn around and say, you know what, we need restructuring. Sorry, that's for Sonia again.
So I wanted to draw the distinction here between short-term liquidity problems of the type that this debt service suspension is meant to address, right? I mean, this G20 effort is not meant to address traditional restructuring or solvency issues. It's more about short-term liquidity problems. So I would kind of draw a distinction between those two things. I would say that over the years, there have been many different types of restructuring. One thing to add here is that the creditor base for emerging and frontier economies is very complex now. So you have multilateral debt that comes at concessional rates, low interest financing. You have a whole range of official creditors, including countries like China, India, Saudi Arabia, who lend on different terms. And then you have the whole panoply of commercial creditors everywhere from banks, institutional investors, private equity, and so on. So any kind of debt restructuring is going to be complex, but we have tools in place to do that. There are well-established mechanisms for creditor coordination, negotiation, creditor committees to make this happen. If it needed to happen on a very big and massive scale, obviously that would be challenging. I think the key there would be international coordination across both public and private sectors. But you're right. I mean, it's no easy task, and the DSSI, the Debt Service Suspension Initiative, in and of itself, is only addressing a very narrow slice of the problem. So we've got a lot of work ahead of us.
Yeah, and I would have just come quickly to you on that, Yelan Tijikov, just to come back from that private sector perspective. It's not, when you have a crisis this deep, the liquidity issues that Sonia Gibbs has talked about can quite quickly become solvency issues. Do you think the investment community is ready for the kind of the depth of debt issues, the severity of the debt issues that emerging market economies might face in 6 months' time?
course, emerging markets always have the cyclicality in the past. So we had this crisis in the past where investors would take their money out, and we all will be wondering whether they will ever come back. And I think in the environment where you still have a temporary shock to the global system, and of course, the emerging markets have suffered as well, you still have an environment of easy money, generally speaking, and a very low interest rate environment. So in that environment, you will see investors coming back when dust settles, and when you really think of your alternatives today, it's inevitable that investors will have to look at emerging markets. Of course, the pace of that return and where investors are going will be somewhat different in terms of selectivity, of course, in terms of also sub-asset classes, that we may see probably more money going to the hard currency versus local currency. At least this is what we're seeing anecdotally with our clients. Maybe less of the equity investors that have been coming to us, more of debt investors still looking for opportunities in emerging markets. But eventually, as we know, we will go back. And in terms of growth and in terms of interest from investors, so there will be no significant material change with the past crisis. Of course, what is different this time, and we started talking about it in the first panel as well, is that amount of fiscal stimulus and an amount of also QE experiment that we're seeing in the emerging market world is quite unprecedented. And obviously, the fact that we now have a significant deterioration in credit worthiness clearly will worry some of the investors, and this is something that we need to work very hard together with emerging market economies to really restore the confidence of policies, and of course help those countries to restore growth. So definitely the engagement that Sonia was talking about, maybe on a temporary side where we can help on the debt relief, will help. Engagement with some countries that we are deeply engaged now in restructurings of some countries where we obviously are effectively implementing a form of a debt relief. So any debt restructuring is a form of a debt relief. What is important is that where today we have a unique opportunity here to start talking to those nations who are in need of financing and debt restructuring about some sustainability goals that we work together with Sonia, with the IMF, with the World Bank, with the IFC. And this is something we're happy to pioneer and really start the process where we will be implementing some of the debt restructuring frameworks, whereby we'll ask those nations also to help us with our ESG goals.
Do you just very quickly on that, we're going to run out of time and I wanted to leave the last words to the two central bank governors, but just on that, I mean, there is a lot of money sloshing around the global markets now, which are not in general going to emerging markets, but we see it in the European markets and the US markets as a result of all this liquidity. Is ESG and particularly environmental challenge a way to unlock, the only way we're going to really reroute some of that money into emerging markets?
Absolutely. We're seeing a very strong demand for green investments with our clients, ESG, sustainable investment vehicles. We're seeing also a flurry of issuance of the social bonds. That some of them came in a COVID-19 response type of format. Some of those will be infrastructure, and some of our initiatives also call for the framework where we will be talking to the nations to really implement more of those social measures, as Minister Guzman was saying, is one of the pillar of their economic program as well, whereby we will ask to have a healthcare funding, a specific bond issuance, for example, that will be really going to build new hospitals in case if we have new waves or new challenges on the healthcare, as we heard from the minister from Peru. So these are the things that investors will be very keen to really fund. So I think this is definitely going to be a very significant topic for investments in emerging markets.
Now, I did want to leave the last word to the two central bank governors. Governor Diokno, people look at this and across emerging markets and say this is an extraordinary combination of challenges from COVID-19 for emerging market economies. We talk about a V-shaped recovery in developed economies, and a lot of fiscal support has gone to help make that possible, or at least conceivable, in developed economies. Do you think it's possible for the emerging market world? And I guess a follow-up to that is, how would you compare the impact of this, in your view, to the global financial crisis for emerging market economies?
Well, it's difficult to put the emerging market economies into one basket. They are so diverse. So in our case, comparing with the global financial crisis, the Philippines did not suffer as a result of the GFA. Actually, we had 20 consecutive years of growth before this pandemic. So we're starting from a position of strength. So we are also affected. We see that the economy will shrink by around between 2 to 4%, but we'll have a bounce, a strong bounce next year, 2021.
Okay, well, that's an upbeat message. And Governor Kenyaho, the final word to you. Is there a V-shaped recovery possible for South Africa? And how do you compare this crisis with the global financial crisis?
Well, it is the V-shaped recovery is possible, underline that possible. This crisis is very different from the global financial crisis. The global financial crisis had its genesis within the financial sector. It was a crisis of the financial sector. This is, at first, a health crisis, and it's been a health crisis that had become both a supply and a demand shock to the economy. And what we had seen, as the crisis deepened, we saw global financial conditions tightening for emerging markets. We did see significant outflows from emerging markets, and this time around, this thing was taking place in a period where you had significant increases in debt in many countries, both from the sovereigns and from the corporate perspective. Getting into the global financial crisis, South Africa had significant buffers. When this crisis hit our shores, it found that we were already in a recession. So the ability of the fiscus to respond to this was constrained. Whereas in the global financial crisis, we could deploy both fiscal and monetary, this time around, the ability of fiscal was limited. So the resources that the fiscal authorities could deploy were actually pretty limited. The central bank was able to respond. But a V-shaped recovery is possible. We think that it is a matter of time before all these extraordinary measures that had been taken by fiscal authorities and monetary authorities take effect. There is still a threat, though, of a second wave of infections across the globe. And I think that as a global community, what we need to get used to is that we are going to have to live with this COVID virus for some time. Talking of a post-COVID recovery, that is, as far as I'm concerned, some way out.
Well, thank you, Governor. I think that's a word of caution to end on. I wish I could have gone to some of the questions that have come forward. Thank you very much, everyone who's put in questions. My favourite question was the person who wanted to know when the international airport was going to reopen for international flights. And it doesn't say which country, and I don't know whether they want to fly in or fly out. But that's obviously speaks to the extraordinary times that we're in. And many of the people who've spoken at this event, I know, are absolutely in the thick of it. So we appreciate even more than usual you making yourselves available. Thank you very much to Governor Diokno and Governor Canyajo and Yelan Sijikov and Sonia Gibbs. We are having another event. We're going to be having 3 emerging and frontier forums this year. As I said at the start, we are very grateful for our sponsors for this event, Fitch Ratings, the Institute for International Finance, and Amundi. Thank you so much for joining us, and stay tuned for news of that next event in the middle of September.